Here's an example on how to look at expected return from what we know from history and what we know from future estimates. And I'll break this down to the numbers. And that always is the starting point. Is like, well, what's already happened? Where are the numbers showing us? And you have the intrinsic value numbers, which are based upon the actual financials of the company. And then you have the stock price numbers. So let's look at what it looks like. And we're going to just go back 5 years from this stock. Well, the stock 5 years ago, the price was $38 and the intrinsic value at that time was $49, meaning that it's a good time to buy. We have a strong company, everything's looking good. Those are some of the assumptions. Right now, we're trading at below its intrinsic value. Great time to buy. 1 year later, it's 2022. Stock goes from 38 to 43, still below its intrinsic value of 48. So not much happened with the company that year when it came to its intrinsic value. And then we went from 43 to 47. Still under now, it's gone from 48 to 52. Companies had some profitable years and profitable forecasts. It went from 47 all the way up to 67. And that's kind of the crossing point right here about 2023, where the stock price now is above its intrinsic value. Intrinsic value did have a gain, but still at 56, lower than its stock price. And we have a really big gain all the way up to 2025 to about $100 a share, where the intrinsic value went from 56 to 63. And then now we've had a decline from 100 back to 76, still above its intrinsic value. This is very common when it comes to intrinsic value of stocks. They're not, the company itself, if you're looking at the revenues, you're looking at the net income and all the different financials are pretty stable. They grow, but the price itself can be very volatile. So in this case, this is what's happened in the last 5 years. Now what we want to look at is look at the numbers behind that. So we're going to just use top line numbers. This starting from 2021 to what happened in 2025, and then now we're using what the forecasts are. So forecasts can be found on many different websites just to understand what the company is forecasting for its future revenue, profits, whatever it might be. Here's where the revenue is. So in 2021, we're at 11.88 billion revenue, and then we went from 2021 to 2025 to 20. So from there, we had some very profitable years, some good increases in revenue. So strong increases, and that's one reason why the price went up. Now, these are the numbers that are setting the intrinsic value. What's happening, and then what's forecast to happen. So this is what actually happened. Now, this is what's forecasted. Companies don't know for sure. The shorter the time period, the more likely they're going to get it accurate, but for the most part, they're going to be something like this. So this is still a growth company. They are growing revenue, and they're doing it. This is the revenue estimates that they have all the way up to 2032, so 22 to 40, and then what they're forecasting is pretty straight line expected growth rate on a percentage basis, about 9.5% on average. Now, of course, it's not going to look like that exactly, but they have to come up with something. Now, say you're just using that, what could you set as a legitimate price? Well, I didn't do it exactly, but basically you would say, well, we're starting at 76, we'll go to 83, go to 91, go to 99. So each year we'll probably, if everything stayed the same, if the stock price stayed there was no reversion to back or forth from intrinsic value, then we would have that growth rate. So it's never going to work exactly like that, but at least this is a starting point to see where we're at. In reality, this could go up quite a bit or go down quite a bit based upon fluctuations in the business cycle, industry dynamics, all kinds of different variables that come up. So we just want to look at where's the price, what's a fair price to buy it, what's a fair price to sell it, how do we use the money that we save? So if you own a bunch in this stock, you want to be able to understand like, all right, I've saved up, I want to feel comfortable with when I'm selling, but also don't feel bad about it and come up with a strategy behind like this is the right amount of shares to sell. So hopefully this is helpful. These are real numbers. These are kind of just the starting point with forecasting what an expected price is going to be or the rate of return. And then you can keep on diving deeper into, well, this company might be doing this, that's going to be an acquisition, or there's a new technology. There's all kinds of in-company dynamics that can play out that maybe will affect these numbers up and down one way or another.